Your bank just closed your account. No warning, no explanation. Just a letter in the mail, or worse, you find out when your card gets declined at the grocery store. This is not a hypothetical. This is happening to real Canadians right now, and almost nobody is talking about it. Welcome to Credit Smart Canada. I'm glad you're here because what I'm about to share with you could literally save your financial life. Let's get one thing straight before we dive in. Most Canadians walk around thinking their money is safe in the bank. Not safe like, I hope the market doesn't crash, but safe like, my bank is loyal to me, I've been a customer for 20 years, they would never just cut me off. And I hate to be the one to break this to you, but that loyalty, it goes one way. Because in Canada, your bank has the legal right to close your account at any time for almost any reason, with very little notice. And there is almost nothing you can do about it once the decision is made. Let that sink in for a second. The big five banks, RBC, TD, Scotiabank, BMO, CIBC, they are federally regulated. They operate under agreements and terms of service that most of us have never actually read. Buried in those documents is a clause that gives them the power to end the banking relationship. 30 days notice in some cases. Sometimes less. And the reasons? They don't always have to tell you specifically what triggered it. Now you might be thinking, okay, this happens to people doing something sketchy, right? Drug dealers, fraudsters, money launderers, not me. I'm just a regular person with a checking account and a car payment. Here's where it gets uncomfortable. It is happening to regular Canadians, people running small cash businesses, freelancers getting paid through e-transfer constantly, people who moved money to crypto exchanges, small business owners with unusual deposit patterns, even landlords collecting rent from multiple tenants, flagged by automated systems that don't understand context, they just see patterns. The banks use what's called an anti-money laundering compliance system. It's mostly automated. Algorithms scanning your account activity, looking for anything that doesn't fit your profile. And when something triggers that system, a flag goes up. A compliance officer reviews it. And sometimes, instead of calling you and asking, hey, can you explain this? They just make the call. Account closed, funds returned, eventually. Banking relationship terminated. And here's the worst part. Once one major Canadian bank closes your account for compliance reasons, others can find out. There's no public blacklist, but the financial industry is smaller than you think. Getting approved for a new account at another big bank becomes significantly harder. You could find yourself essentially locked out of the traditional banking system. Think about what that means practically. You can't get direct deposit for your paycheck. You can't pay your bills online. You can't get a mortgage or a line of credit. You can't even rent an apartment in most cities without showing a bank account. In 2025, being unbanked in Canada is not just inconvenient, it is devastating. So what actually triggers an account closure? Let me walk you through the most common patterns CreditSmartCanada has seen and researched. First, large or sudden cash deposits. If you suddenly start depositing thousands of dollars in cash without a clear history of doing so, compliance systems notice. This is especially true if you're running a business that was previously quiet. The system doesn't know you just sold your car or got paid for a renovation job. It sees an anomaly. Second, frequent e-transfers to multiple different people or receiving money from many different sources. This pattern can look like underground banking or unlicensed money service activity to an algorithm. Third, cryptocurrency. If you're moving money from your bank to a crypto exchange regularly, some Canadian banks are watching this closely. They've even started blocking certain crypto-related transfers outright. But if your activity is heavy enough, it can trigger a broader account review. Fourth, politically exposed persons or connections to them. This is a real compliance category. If you or someone you regularly transact with is flagged as a politically exposed person, think foreign government officials, even municipal politicians in some cases, your account may get additional scrutiny. Fifth, and this one surprises people, being a legal cannabis business owner. Even with full federal legalization in Canada since 2018, many banks still treat cannabis-related businesses as high risk. Multiple cannabis entrepreneurs have been debanked despite operating completely legally. Now here's what I want you to actually do with this information. Because this video isn't about fear, it's about being credit smart. The first thing every Canadian should do right now is make sure they are not putting all their eggs in one basket. Have accounts at more than one institution. A big bank plus a credit union is a solid combination. Credit unions in Canada operate under provincial regulation and often have a more relationship-based approach to their members. They are not immune to compliance rules, but they tend to have more human review processes. Second, document everything. If you're running a side business, keep records of where your cash comes from. If you're selling things on Facebook Marketplace, keep screenshots. If you're receiving money from family overseas, keep communication records. The moment your bank ever questions your activity, you want to be able to explain it clearly and quickly. Third, know your rights. Under the Financial Consumer Agency of Canada, there are some protections in place. Banks cannot close your account without providing advance notice, and they must give you access to your funds. They are supposed to tell you why your account was closed, though they often give vague reasons. If you believe you were treated unfairly, you can file a complaint with the FCAC or through the Ombudsman for Banking Services and Investments, OBSI. Fourth, consider keeping a portion of your money in a high-interest savings account through an alternate provider, EQ Bank, Oaken Financial, or even a credit union savings account. This way, if your primary account is ever frozen or closed, you have immediate access to funds while you sort out the situation. Fifth, if you are a business owner, talk to a financial advisor or accountant about proper structuring. Having a clearly documented business account with proper invoicing and paper trails makes your activity look exactly like what it is: legitimate commerce. The hard truth that CreditSmartCanada wants you to carry with you is this: the banking system in Canada is not set up to look after you. It is set up to manage risk for the institution. You are a customer, yes, but you are also a liability in their compliance department's eyes. And that compliance department doesn't know you. It doesn't know that you're a hardworking Canadian trying to build something. It just sees numbers. So you have to be the one who protects yourself. You have to be the one who diversifies. You have to be the one who stays informed. This isn't paranoia. This is just smart. This is Credit Smart Canada. If this video helped you or made you think about your own banking situation differently, share it with someone you care about. A family member, a friend who runs a small business, anyone who deserves to know this information. And if you want to keep learning how to protect your credit, your money, and your financial future right here in Canada, subscribe to Credit Smart Canada. We're not here to scare you. We're here to make sure you're never caught off guard. Your money, your rules. Stay smart, Canada.